Hey everyone, it's Mike Fiebernitz with RE/MAX Southern Shores here in Myrtle Beach, South Carolina. And today we are jumping into the number one topic that is making headlines right now, our current federal government shutdown and how it affects the real estate market. Now, before you scroll away and say, that's politics, that's not real estate, bear with me and let me explain. Because a federal government shutdown can absolutely affect home sales, interest rates, and even home values, especially right here along the Grand Strand in the Myrtle Beach market. So let's break it down in plain English. We're going to start with transactions. And during a federal government shutdown, the real estate market can definitely slow down as well. Not because of buyers or sellers slowing it down, but because of federal agencies behind the scenes are not moving at full speed. Here's how it plays out. We're going to start with FHA, VA, and USDA loans. These types of loans get hit the hardest because they're government-backed loans, and they rely on these government employees and agencies to review the loans for approvals, appraisals, and these case numbers. So when staff gets backed to only essential only, then a lot of these loans tend to sit and wait. Even conventional loans that aren't even backed by government agencies can still get caught up in this slowdown. Why? Because mortgage lenders have to verify income and identity of the buyers with the IRS and Social Security Administration, which if those two agencies are backed down to essential only staff, then the conventional loan could get slowed down as well. And if you're buying near the water or a property that is in a floodplain, let's say an oceanfront house here in the Myrtle Beach market, that's a huge one because the National Flood Insurance Program cannot issue or renew any flood insurance policies during a government shutdown. So if you're in a floodplain, that means no flood insurance until the government reopens. So imagine hundreds of closings being slowed down because of this government shutdown, which can add up very quick. Now, let's talk about prices and values. In short, a short government shutdown won't crash the pricing in the real estate market, but it will cool buyer confidence. When people hear government shutdown, they get nervous and they tend to pause financial decisions, especially big ones that deals with buying a house. That hesitation can basically lead to, buyers holding off on making purchases, which means inventory could increase and a lot more homes are sitting on the market for sale. So during this shutdown, you might see fewer offers and longer days on market, especially in the high-end luxury market. And in areas with a lot of federal employees like DC, Virginia, some parts of South Carolina, that is definitely going to see the pain more than some of the rural areas around the country. For us here in the Myrtle Beach market, we're probably going to see it more indirectly from out-of-town buyers that are in these, big metropolitan cities like DC and Virginia that, are going to hit the pause button on second homes and investment properties. So we will probably see it more indirectly here. Last, I'm going to touch on mortgage rates. Ironically, during a federal government shutdown, there's a possibility that interest rates could drop in the short term. Here's why. When the market experiences uncertainty, like during a federal government shutdown, investors pull their money out of investments and put them in safer places like U.S. Treasury bonds. That increase in bonds will usually decrease bond yields, which interest rates tend to follow. So technically, mortgage rates could drop, which will be a great thing. But there's a caveat to this. With the government shutdown, it might be harder for buyers to be able to lock in that rate when it does drop. So what's the real takeaway here? Well, it all depends on how long this shutdown lasts. A short shutdown basically means some delays, a little bit of hiccups, nothing major is going to happen, a little frustration, just a little irritating to deal with, but we should get back on track pretty quickly. So what happens if it's a long shutdown? Well, if it's a long shutdown, that means confidence will drop, transactions will pile up and get backlogged, and that could cause a negative impact on pricing and inventory. Either way, it just shows how important timing matters, especially with buyers and sellers relying on financing. If you're currently thinking about buying or selling here in the Myrtle Beach market during this government shutdown, don't panic, but do plan. Work with an agent that definitely understands during a government shutdown how financing works, delays with flood insurance, and closing timelines. If you'd like to know how this could affect your value or the sale of your property during this government shutdown, just reach out. My information's down below. I'd love to be a resource to you and help you out. And if you found this video helpful, hit the like and subscribe button so you're updated when I put out the next video. I'm Mike Fiebernitz with RE/MAX Southern Shores. Appreciate you tuning in, and I will see you in the next video. Have a good one.